put my faith in a ticker, like a preacher to a prayer. Swore I saw a sign, but turns out nothing was there. Took a loan, took a chance, doubled down on borrowed time. Now my bank account's a graveyard where my dollars go to die. I was riding high on promises made of smoke and gasoline. One bad trade, one last mistake, and it all came crashing clean. Lost it all in the blink of an eye. Burned my wings on the way to the sky, but the sun don't shine on the reckless kind. Had to learn how to fall just to rise. Now I'm picking up pieces, stacking them tall, brick by brick till I get it all. Might have lost every dime, but you best believe I'll be back in the green. Whiskey and regret don't mix well with candlelight. Watch my future turn to ashes in the quiet of the night. But pain's a damn good teacher when you're sitting on the floor. And I ain't one to stay down, I've been broke before. I was chasing gold on a crooked road, didn't see that it was paved in dust. But the good Lord knows, and the wise man says, that a fall don't mean you're crushed. Lost it all in the blink of an eye. Burned my wings on the way to the sky, but the sun don't shine on the reckless kind. Had to learn how to fall just to rise. Now I'm picking up pieces, stacking them tall, brick by brick till I get it all. Might have lost every dime, but you best believe I'll be back in the green. Had to lose my pride to find my spine. Had to break apart just to realign. The storm came hard, but I let it pass. Now I'm standing here with a second chance. Lost it all in the blink of an eye. Burned my wings on the way to the sky, but the sun don't shine on the reckless kind. Had to learn how to fall just to rise. Now I'm picking up pieces, stacking them tall, brick by brick till I get it all. Might have lost every dime, but you best believe I'll be back in the green.
Welcome back to another episode of the Matt Kohrs Show, where I'm Matt, your Kohrs, and together we are the show. And yes, I'm wearing my Lucky Buffalo shirt because based on my trading between Friday and Monday, your boy needs to get a little bit lucky to repair what's been going on in the portfolio. So we're breaking out all the stops. I did a couple lucky rain dances this morning. There was a horseshoe involved. There was a rabbit foot involved. There was talking to a clairvoyant. I did everything possible. I was walking under ladders. I was talking to black cats. I was going into casinos backwards. I was doing everything I could. I don't know if it was good luck or bad luck, but I'm definitely doing everything I possibly can this morning to improve my overall lucky status. My just like the magnitude of my luck coming into this session. I'm doing everything I can. You guys can't see it. Well, you can if you're subscribed to the OnlyFans, but I have on my lucky underwear. I'm doing everything. I'm doing everything I can because yesterday was a debacle. Friday was a debacle. It's just a debacle within a debacle. It's like those nesting dolls, the Russian nesting dolls. You open up one debacle and then there's another debacle within said debacle. And then you get into the third debacle and you feel at a certain point you're just being bamboozled. Hoodwinked, dare I say it. But today's going to be the day that we're fighting back, and that's exactly why we are very honored to have on our music guest, Kohrs on the Cob, to bring the show to light this morning, to really get us going. So I'm ready. I think Kohrs on the Cob said it perfectly within his song, within his lyrics. So obviously a quick shout out to him stopping by early this morning. I think he has a big tour in Nashville or Austin or something like that today. So the fact that he took time out of the schedule to sing into this beautiful mic this morning, such a beautiful lyricist. Very, very happy. Happy that we could afford him. Honestly, the guy's cost is going up. It's skyrocketing. Anyway, I digress. We have a lot of things to chit-chat about, and as you could tell from the title, we are getting to the point where it's a very legitimate question. Is it time to buy the dip? So I'm going to be giving you some of the stats, facts, and figures. Of course, I am not your mom. I am not in control of your money. You can choose to do whatever you want with this information, but I want to talk a little bit about just the generics of seasonality, kind of knowing where we are in that phase. But really, I want to spend a bit more time of talking about how in the short term, the option structure is now changing. It's still clearly dominated by bears. It's still clearly dominated by puts, but it's not as much as it was. The gradient is kind of going back the other way, which is suggesting one of two things, or maybe really one of three. Either the bears are getting tired, the bulls are stepping in, or a combo of the bears getting tired and the bulls are finally starting to step in. The truth is probably somewhere in the middle there. I'm sure there's certain sellers who are definitely out of things to sell, and then there's definitely certain buyers who are starting to step in because, hey, when you're down 20%, why not start buying some of your favorites? If you have that long-term view, it's just only a matter of time before the quality blue chips names and the major indices really return. So it's probably somewhere in the middle, but I'm going to see if I can take advantage of it. So that's the plan. We're going to be breaking down some of the hot news. We're going to be looking at some charts. We're going to be talking about some stats, facts, and figures. We're going to be getting into some of the options. So I hope that sounds good to all of you. I hope you guys are ready to let that rip, but it's technically not a turnaround Tuesday because we didn't drop in excess of 1% yesterday. So it's not really a turnaround Tuesday, but that doesn't mean we can't not see a very nice green Tuesday. So we're going to see what we have going on because it's going to be an interesting battle to say the least, especially through the lens of the fact that we're going to be getting an update on the whole tariff situation. Apparently, we are going to hit China with additional tariffs at noon today, so in less than 3 hours, and they're fighting back, and the EU's like, well, we're going to hit the U.S. with tariffs, but we'd also love to negotiate, and then pretty much every other country's like, please, 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 can we negotiate? Then we have some other drama stuff and whatnot to get into, so that's what I have for you. I hope that sounds good. Like I said, put on your luckiest of attire, and let's get rocking. Dow futures rally 700 points as Wall Street tries to rebound from Trump tariff sell-off. The rebound this morning is actually pretty strong. I mean, yesterday at the low, we were at 482. We're currently at 518. That's a $36 difference. I know this chart might just seem normal, but like, hey, some bars up, some bars down, but I want to clarify. From the low we saw yesterday till now, we are up 7.5%. That is massive. We are moving an entire monthly range in singular trading sessions right now. Similar situation with the Qs from the low yesterday to right now. We're up about 8%. Meta is getting a nice rip. I mean, there's a lot of these popular tech names and really just popular names in general. NVIDIA from the low yesterday until now is up 18%. Are you fucking kidding me? That's absolutely insane. So we're seeing a little bit of constructive behavior going on right now in the market. And obviously, maybe we could properly explain why it is or it isn't happening, but at the end of the day, what really matters is the fact that price is now starting to go back up, which is kind of leading us to an interesting daily setup. As of now, if we were to open at this exact moment, we would be right around 5,200, so just below that high from yesterday. And if we start to break that, especially if we take out the high from Friday around 5,300, there's going to be a lot of people, this guy included, that's going to start looking at the gap fill at 5390 and 5571. Now, if you're looking for the SPY equivalent levels, it is 53670 and 55481. We have an upside gap fill and then an upside gap fill. So those, obviously, I want to put it on your radar. You're not going to be surprised to find out that those exist in the NASDAQ as well. Looking at QQQ, we have one at 450.14 and 465.86. So if you're trading the S&P 500, if you're trading the NASDAQ 100, I highly recommend you pay attention to those levels. Those are just good technical price levels to know, to note, write them down, set alerts, do whatever you need to. And then I also want to show you in a little bit how they are kind of coalescing, if you will, with some major options levels. So we're going to be getting into all of that. But first, I do want to cover some just global political news. U.S. and Iran to hold high-stakes nuclear talks. Trump wants direct negotiations, but Tehran says it's planning for indirect talks in Oman. So this kind of came out yesterday. It is very interesting that we might be at this level of a direct talk between the U.S. and Iran. Obviously, maybe, I know we haven't spoken about this, and if anything, there's a little bit of breaking news on it this morning. The whole Russia-Ukraine thing. For a bit there, everyone's like, yo, ceasefire, this is going to be good. Global tensions coming down. Another thing that was part of my major thesis of why I think April is going to be overall a very green month. But here, this is another one there of like, once again, if we see global tensions, not from a financial standpoint, I'm talking from like an actual conflict standpoint. If we see global tensions continue to simmer down, that's good for everyone involved, not just for the markets, not just for the economy, but just being a person on this earth. That is obviously going to be a positive thing. So just probably something worthwhile to pay attention to. And since I alluded to it, you might want to look into the whole Russia-Ukraine, Zelensky talking about capturing some soldiers. Apparently, some of them, 2 of them were from China. So there's a little bit of news there. And if things are quiet, which I don't expect them to be, but if things are quiet, we could spend some time talking about it. But I don't think that particular narrative is going to have an impact on today's trading session. So I'm not saying it's not important. I'm just saying it's not necessarily within the scope of what we degenerate traders really care about right now. What we do care about is this guy. Trump's tariffs in China collide to shock the 115 trillion global economy. Investors the world over are trying to reprice risk in the age of uncertainty, inflamed by dueling U.S. and Chinese visions of the future. So what you need to know is earlier this year, we hit China with tariffs. Then last Wednesday, when Trump was speaking at the Rose Garden, we hit it with more tariffs, and it came in way higher than anyone anticipated. Way higher. Because remember, this idea of reciprocal tariffs is actually not based on directly tariffs. It's allegedly based on tariffs plus unfair trade and currency manipulation. So that's a little bit more reasonable. You might say, okay, like what's the math for them figuring it out? Well, apparently, the administration's definition of tariffs, which is tariffs, unfair trade, like trade barriers, and currency manipulation, is all apparently just computed by looking at a nation's trade surplus. So that's a little bit confusing and maybe doesn't make the most sense to people paying attention. But regardless, that's how they did it. And then they cut that number in half and started hitting everyone. And obviously, there's a large trade imbalance between the U.S. and China. So thus, then the tariffs we hit China with, once again announced on Wednesday, going into effect tomorrow, were surprisingly large. But it didn't really end there because then China obviously got pissed off and said, well, if you're going to tariff us more, and they obviously didn't agree with the tariffs, we're going to tariff you more. And then yesterday, right after the craziness where the market pumped and then came back down because of the false news of the 90-day pause, like that bullshit, right after that, Trump said, well, if you do that, we're going to hit you with even more. And that's apparently going to go into effect today at noon o'clock. China vows fight to the end on tariffs as it props up market. So the whole fight to the end, this is their response to Trump's response to their response to our response, which is crazy to say, but actually what I said is right if you think about it. But anyway, they now responded to the hike that's going to basically, Trump gave them an ultimatum. He said, hey, you have till noon today to cut your tariffs, or we're going to hit you with more tariffs. And then they responded by saying, we're going to fight to the end, brother. Let's go to the mat. China has pledged to retaliate against Donald Trump's latest tariff threat, mobilizing state organs to send a message of resilience, raising the risk of a prolonged trade war. China says it will fight to the end after Trump threatens a 50% additional tariff. Depending on how you count it, this is going to push them up closer to 100% tariff. It's crazy. China's Commerce Ministry said it's resolutely opposes U.S. President Donald Trump's threat of escalating tariffs. Trump said he would impose an additional 50% duty on U.S. imports from China Wednesday if Beijing does not withdraw their newly announced 34% tariff it imposed on American products last week. The People's Bank of China yesterday, Tuesday, well, technically today, it's when we were sleeping, set the midpoint rate for the onshore yuan at 2.73. Okay, that's fine. And right here, China says it will fight to the end. They did a piece on it, and we're going to find out. I don't think that China is going to be blinking before noon today. It would simply just kind of not put them in the net best negotiation, kind of makes them look a little bit weak. So I would fully expect around noon, maybe just after noon, that we're going to be hearing from Trump. I'm sure he's going to be popping off, or someone from the administration says, yep, they did not do what we want them to do. So we're going to hit them with 50%, and it's going to go into effect tomorrow, Wednesday, April the 9th. Treasury Secretary Bessent says China's escalation was a big mistake, country playing with a losing hand. I think it was a big mistake, these Chinese escalations, because they're playing with a pair of twos. This was all said on Squawk Box. What do we lose by China raising tariffs on us? We export 1/5 of them of what they export to us, so that is a losing hand for them. It really is. That's like kind of the interesting aspect of the situation that we're in. The game theory of what's going on is we don't trade the same amount. Like literally for dollar value, they're sending us 5 for every one that we're sending them 1. So when everyone's jacking up tariffs, the tariffs might be absurd, but when you apply that percentage, that ratio to the actual amount of goods, the magnitude of the dollar value at the end of the day is far more impactful on China than it is on the US, because once again of that trade imbalance. So this is actually a really valid point. It's not good for anyone involved, but think about the pure magnitude of who's going to get hit harder. This is who's going to get harder. Someone's screaming at me to check breaking news. What's happening as I'm talking? Trump, we are waiting on a call from China. It will happen. South Korea top team is on a plane heading to the U.S. We are waiting for China's call. China also wants to make a deal badly. So a little bit of breaking news that we know. I mean, I have a feeling China's not going to back down today. Like I said, it would just make them look a little bit too weak, but I wouldn't be surprised if it's sooner rather than later. Once again, because of that massive imbalance. And when you start adding up the numbers of what we're hitting them with, I mean, some of these, the tariff numbers are getting comical. Goldman warns of bear market. BlackRock downgrades U.S. stocks. I think at this point in time, that's a little bit negative, Nancy. I mean, we're already down in the bear market territory. I think it's going to be a short-lived bear market. Like I said, when you're a long-term investor and you're looking at your long-term portfolio, this is not the time to sell. At least that's what history would suggest. If you are right now looking at your long-term portfolio and looking at like your unrealized gains, maybe dropping and maybe some of them turning into unrealized losses, do not sweat it. You need to have a 5, 10, 20, 30 year look at what's going on. You shouldn't be panicking over what's happened over the past couple of weeks. Every single major market drop has taught us selling into that panic is not what you should do. And now the fact that I'm telling you that and highlighting that you just got to look at every other drop historically, if you're selling at this point right now, that's just a dumb thing to do. It is legitimately a stupid financial mistake to be selling high quality blue chip names at this point in time. You should be doing the opposite. You should be finding your favorite high quality blue chip names, and you should be adding and adding and adding as we're getting a tasty discount, which it's funny because when things are ripping, when the market is ripping this entire 2021, 2022, 2023, everyone's complaining that it's too expensive and you don't want to chase it. And now that you're actually given this dip opportunity, everyone's like, I don't know, should I do it? So we're in this the inverse of what should happen. People buy the rips because of FOMO, and then they're selling the dips. It's the opposite. When you're buying the rips, you're paying too much of a premium. You should just ride the rips and be like, oh, this is crazy. And then wait for dips like this that you're like, oh, okay, like this is the time to buy. I get why the psychology of the average trader and investor is backwards, but it is really something you have to put in the work to fight against because it is just tactically the wrong way to handle this situation. Anyway, BlackRock strategists downgrade U.S. equities to neutral from overweight, expecting more pressure on risk assets in the near term due to the global trade tensions. Goldman Sachs strategists warn that the equity sell-off could turn into a longer-lasting cyclical bear market as recession risks mount, with a 45% probability of a U.S. recession. Now, remember, a recession is kind of more of a definition of the economy rather than the stock market. Sometimes when we have this recession, it can be met, obviously, with downward pressure in the stock market, but that's not necessarily a given. A lot of the times it has to depend what's going on in the world of fixed income and more specifically what's going on in monetary policy. So just because you hear the word recession, yes, that is not good, but it's specifically not good for the economy. And if they ever keep the definitions like clear cut, which like the last administration was playing a little bit loosey-goosey with what is a recession, what isn't a recession. But regardless, this is all descriptive of the economy, and it's not necessarily like if you hear recession and you're like, oh, we're in a recession, that must mean the stock market is getting hit. That's actually not necessarily true whatsoever. So don't make that like that misstep. I do want to remind you, we've been doing a lot of chit chat about the overall market, but we are about to restart earnings season. So we did hear from Walgreens this morning. Walgreens tops estimates as drugstore chains cuts costs, prepares to go private. Right here, Trump had a great call with South Korea, says China wants to make a deal. All right, well, that might be good, some news. Anyway, Walgreens having a good earnings. Tomorrow morning, we're hearing from Delta for anyone trading that. Remember, when you talk about the major airline carriers, we're talking about Delta, American, Southwest, and United. Those are the four majors. There's really not that different. It's super easy to telegraph forward, extrapolate forward. However Delta does, most likely that's how American, United, and Southwest are also going to do. They really just don't have that much different of a business. So anyway, just wanted to call that out for tomorrow morning with Delta. And then we really this isn't like hardcore or anything. It's not definitive, but a lot of people, myself included, consider the start of earnings season to be when we hear from all these major financial plays. And that's when we hear from them this Friday, which is also the day we get the PPI report. But anyway, this Friday, we're hearing from JP Morgan, BlackRock, Wells Fargo, and Morgan Stanley. Once again, we're getting the producer price index that morning. And the day before, Thursday of this week, we're going to get the consumer price index. I should also note that tomorrow, Wednesday, the day that all of these tariffs are supposed to go into place, at midday, afternoon, 2 p.m. We're going to get the FOMC meeting minutes. So I wanted to call that as well. So basically, not only do we have high expectations of just crazy ranges and volatility, but we have other things that are definitely going to add a little bit of gas to the fire. Now, if you want a very quick little cheat sheet of all this information, you're like, man, that's good. I just wish it was all in one place. That's exactly what the newsletter is for. This newsletter is 100% free. You've never had to pay for it. You're never going to have to pay for it. Go to mattkohrs.locals.com. It's in the description of the video. I break down the previous week, tell you what to look forward to in the upcoming week. I call out all the earnings, and then I highlight the ones that I think you're going to care about the most. I give you all the major macroeconomic events. Yesterday, we had consumer credit. Today, Daily is already speaking at 8 a.m. You can see we have some Fed members speaking later this week. We have the FOMC meeting minutes, the inflation report, the next inflation report, more Fed members. Friday's going to be a wild day. Probably the most useful, at least for like zero DTE traders in here, is I give you the seasonality for each individual day. Today, Tuesday, April the 8th, over the past 27 years, the better part of 3 decades, the bulls have won this day 56% of the time, slightly better than just the normal distribution of the market. But what's interesting is the size at which the the bulls win. This, you can see for about the first 15 years, this day really didn't do anything. A little bit up, a little bit down, a little bit up. But ever since about 12 years ago, clearly a little bit more of a bullish trend. So I just wanted to call that out to everyone. This is a look at the hypothetical equity curve you would have if you bought at open and sold at close on the S&P 500 futures market. So once again, is this stuff the end all be all? No, but it is pretty useful and important when you see strong seasonality, either to the upside or downside. Just so you guys know, just in case you missed the upcoming shows or something like that, Wednesday is pretty neutral, Thursday is a bit bearish, and then Friday is a bit bullish. So that's the seasonality per day for the remainder of the week. With that being said, how much has the market moved? Okay, we're pushing a little bit. I see that NVIDIA is already taking out yesterday's high. I see Meta is. So that stuff definitely looking a bit exciting for sure. Let's look at this. Okay, bullish, 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 bullish. So the 5-minute, the 10-minute, and the 30-minute on the S&P 500 and the NASDAQ right now are both bullish. The 4-hour still bearish, but obviously it's heading up and maybe we get that potential test today. We've already went over the daily chart. I'm just saying, be mindful of the upside gap fills, 537, 555. And then on the Qs, we're looking at 450 and 466 roughly. But once again, we're just looking at the low from Thursday and Wednesday of last week on both the SPY and Q respectively. So keep that in your mind today. But more importantly, sure, I'll save that. Why not? Twist my arm. These are the major levels of interest to me today. So to better explain this is, let me update the current map of what in the world is going on. You can see, first of all, we are in a negative gamma environment. Negative gamma is slippery price action. It's not bullish, it's not bearish. It just means when you get going in either direction, you can really, really get going. So that's the first thing that jumps out to me. The second thing that jumps out to me is we have some long calls and we have some sold puts below us. That is a bullish bet. We also have more long calls all the way up here at 5,400. It's not the biggest size, but it is something of note. It's 2,000 shares all the way up here, or 2,000 contracts on SPX all the way up at 5,400, which is another, 170 points from here. That is 100% within play today, especially on this slippery surface, but there might be a little bit of a hiccup at 5350. I see it's not really a giant positive node as we can see down here, but it's not as negative as maybe you'd want it to just like rip through that price action. So I want to call that out. But anyway, based on the open interest from the 0 DTE, the full chain, and then also what we're seeing on the gamma map, these are the key levels of interest for me today. Now, I know there's a lot going on, so let me just take one quick second to explain it. The high, the low, and the close, the green, the red, and the white are all marked out. Those are all key levels. So it's the high, the low, and the close of yesterday's session. And obviously, as of right now, we are pretty close to actually breaking out. What I then, on top of that, these yellow lines are more of the key open interest, delta, and gamma levels. And then the white box is the transitional level. I would say in the very short term, like the 0 DT, the bulls are in control if we are above this box. Obviously, as of right now, we are scheduled to open above this. So yes, I do believe that the bulls are in control in this short time period. Now, from here, we're kind of open up in an interesting point. I was hoping we would open below 5,200 because then that would make an interesting play to play for 5,250 followed by 5,300. Looks like we're a bit closer to this though. So there's still this play of like bull target number one, yesterday's high, and just the clear open interest level of 5,250. But what's interesting is right now, the net situation for calls is net long calls at 5,200, 5,250, and then it's net short calls at 5,300. So this could definitely serve as some resistance, but if there's enough bullishness or whatever, enough momentum to the upside that breaks, the next place of long calls is 5,400, which is shown right here. So I think that that's going to be kind of a big target of the day if we get in the situation of successfully breaking and holding above 5,300. So it's a giant if-then statement. If we break and hold, then I'll be looking for 5,400. But these are the levels, and it's as easy as this, just playing from level to level to level. Whether you're going in the bullish direction or the bearish direction, know where the support is, know where the resistance is, and play it from level to level to level. So if you want to take a quick screenshot of this or just write these levels down, have fun, go for it, rip it. I should note that it's a small chance, but it's not a non-zero chance that if we actually push 5,400, like let's say this happens in the afternoon and there's just like an all-day bull rally, something like that, I should call out 5,500 flat. That would be the next level. But once again, that's a low odds play. It might happen. I'm not saying it's not gonna happen, but I'm just saying that would be like the ultimate reach target on a 0 DT. But as of now, this is what I'm looking at. Obviously, in this conversation, I'm focusing more on the bull side just because, as I mentioned, we are scheduled to open above the transitional zone, which in the 0 DT does mean that the bulls are in control. But with that being said, I will obviously kind of be waiting out to see like how the market opens. And then the other thing I want to remind you of is Edgeful. Edgeful is one of the partners of today's stream. I highly, highly, highly recommend you take advantage of their free offer. Right now on the screen, this is what it's going to look like. There's a free 7-day trial. It is pinned to the top of chat. It is in the description of the video. It is free. I know you guys love free stuff, and I'm offering you something for free right now. If you use that link pinned to the top of chat in the description of the video, you can get all this data and analysis for free for the first week to see if you like it. And I use this stuff literally every single day. I always start off with seasonality and I say, okay, April is a bullish month. Then I look at the week and I say, oh, this is the fourth or fifth most bullish week of the entire year. And I lock that away. I'm like, okay, I know from a seasonality standpoint, this particular week and month, the bulls are commonly in control. Then the next thing I look at, just because we are getting a little bit of a gap up, like to look at the gap up probabilities and the chance of it getting filled and all that good stuff. Right now, we are gapping up. I mean, you could see where we're at. If I bring up the SPY, we are way above where we were. So with that in mind, it does give you the odds. Gap up filled, the chance of it being filled is 64%. Gap up not filled, 36%. So maybe that's not the most interesting one to you today, but the one that I'm really going to like is what happens when we break yesterday's high, which I do think is going to happen. High broken and we close green, 82%. Do you realize how good those odds are that in the event that we take out SPY's high from yesterday at 523.17, which we are dangerously close to doing that, dangerously close, then we can say there's an 82% chance that we will close out the day above 504.38, which is yesterday's close, because that's what the measurement of being green or red. That is a perfect opportunity to be selling some puts with some super high odds, 82%. So I'll check that one out. And then the other things I like to look at, this is more for like my linear trades on the futures market of like, instead of selling premium, like actually buying futures contracts or selling futures contracts. I like to look at these odds of the breakouts and the breakdowns and then really commonly the extension. So we could check that out in real time, but it's the opening range, the ORBO, the opening range breakout and or breakdown. Basically, you wait whatever the range is that you want, generally 15, 30 or 1 hour. And then you look at the high and the low of that first bar, whether the 15 to 30 the hour, and then you wait for the market to either break above or break below. And then what's really cool here is we actually get the extension. And once again, I'm looking at the SPY. You could do this on the NASDAQ. You could do this on your favorite ticker. This is not just the S&P 500. I just use that as an example, but they have so many great reports that you could get into and breakdowns. And I think it's absolutely phenomenal. And once again, this is free. FREE. Use this thing pinned to the top of chat in the description of the video because you can get all this data and try it out and see if it is appropriate for you. But I have a sneaky suspicion that you're really, really going to like it. And with that being said, dingity ding ding ding, the world's largest casino is now open. Play responsibly, and if not, have fun. All right. Before I forget, I just do want to remind you that this is pinned to the top of chat. It's in the description of the video. Shout out to Edgeful. You can get all of that data. Check it out. A free 1-week trial pinned to the top of chat in the description of the video. I highly, highly, highly recommend you guys do that because you have nothing to lose. It is a free trial, and I'm getting a lot of breakout alerts this morning. A lot of breakout reports or alerts, reports, whatever you want to call it, this morning. All right, is this working for me? Hello. Yes, no, maybe so. Yes, no, maybe so. Yes, no, maybe so. Did that go? Nope, that did not go. Is this at all working? Data's always going crazy. All right, we could come back to this. Obviously, we don't have that much data yet, but here's thus far the options flow, an initial pop followed by an initial hit, while the Mag 7 is just looking a little bit drunk, if anything. Why the fuck is this not working? Okay, it did work. It did work. Perfect. All right, we did that. I'm just doing a little bit of early morning rebalancing because of the strength of the open. Hello? Modify. Dude, is anyone else having... I'm on different brokerages right now, and it is having a tough time pushing my orders through. It is having a tough, like even on market orders, I'm having a tough time pulling the ripcord. Okay, I think I finally got it. That took awkwardly long. I don't know what's up with that, but it's probably representative of the craziness we are in. We see a collapse in vol. That definitely is going to make it difficult. If you're thinking that this is the perfect time to just YOLO deep out of the money calls, you're wrong. Don't do that, because if you do it, even if you're right and price goes up, it's going to mean that vol is also falling, so you're going to get vol crushed. So better than buying deep out of the money calls, you're better off either selling puts. You're better off going long futures, which is another leverage product. You could do a call debit spread, or if you're like, no, man, I really need to play calls, like you just got to play closer to at the money so you can gain delta value, because you're going to get crushed on the vol side. So please be very, 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 very careful with that. For some reason, people think buying an out of the money YOLO call is the same as buying an out of the money YOLO put. It is not. If you are right and the market starts to rip, volatility, VIX, is going to get crushed and you're going to lose Vega. So yes, you might be gaining delta, but they're going to be working against each other. So like I said, a couple ways that you could theoretically battle that is take advantage of the vol crush by selling puts, which is a neutral to bullish bet. You could go long futures, which has nothing to do with those Greek values, and you could just ride the trend up. You could do a call debit spread. So the other leg, the second leg of the call that you're long, you're going to also sell a call on top of that, and that will help you a little bit. And it does put a cap on it, but there's going to be other benefits there. And if you're like I said, if you're like, no, man, I really, really just need a call. I really just need a call. Probably more optimal for you to be closer to at the money. Like, don't YOLO it so far out of the money, because you're going to want to gain intrinsic value, because you're going to very rapidly be losing extrinsic value. Not only is the theta going to be burning you from the time decay, but you're also going to get vol burned as well. I don't even know if that's a real word. Maybe we're making it up today. But it's environments like this when vol's super, super high that it is maybe not advisable to get those super, super out of the money calls, just because you're going to get vol crushed. You see it all of the time when people play earnings on equities and they're like, dude, I bought calls and we gapped up. Why did I lose value? It's well, because the vol got crushed. You were going into a volatile event, i.e. the earnings. It gaps up, doesn't gap up more than expectation. And then inherently the implied volatility just leaves the system and fucking see you later. So it is a very, very, very real thing. Be careful. We are in a prime example of it. NVIDIA is up 7%. Golly. Bullish, bullish, bullish. Bullish, bullish, bullish. Okay. Oh, SPX. Let me go back to SPX. I like this view a little bit better. You can see where we're at. So we are holding 5,200. We are above the transitional zone, which would make me personally think that in the short term, the bulls are currently in control. We do have this downside gap to 5,062 if you want to play the yesterday's close, but there's no true gap on the chart to yesterday's high or low, because we're opening within the range. But from here, I would say we're kind of opening at this key level, so we could use that for the day. If we hold above 5,200, obviously your first natural target would be yesterday's high, and also the key open interest level around 5,250, which once again, that's about yesterday's high. So if you're using something like the SPY, literally just look at the high from yesterday on the SPY. Past that, 5,300. So we have long calls. These are short calls, which is interesting to me. Might be difficult to get above that level, but if in the scenario that we do and we push above it, obviously from there, then be watching 5,400, which I showed you earlier today. There's a lot of long calls. That's quite the bullish bet, especially given the backdrop of the current insanity. So that's what I'm personally watching here. We'll go to the minute chart. You saw some enthusiasm. You saw a bit of a pump. Maybe we're going to come down and just retest, give a little kiss to 5,200, or who knows, maybe we break this and we want to push all the way to the transition zone. That's also 100% possible. I'm just kind of sitting here waiting to see how things either do or don't play out. I'm giving the market a little bit of time to breathe, maybe a little bit more than I normally do. I don't know. I feel like I always say that, and then before you know it, I end up trading early on the day. So I'm just going to sit here and be as patient as I possibly can. Obviously, if you have any, like if there's any breaking news that we should know about, feel free to shout it out. The more knowledge, the merrier for everyone involved. The Mag 7 had a pretty bullish day yesterday, referring to its delta flow. It wasn't really aggressive call buying, but there was a lot of long-term puts that delta was pumping, most likely suggestive of the fact that people were either selling their puts to lock in their profits, or they were creating a new position by selling puts, basically saying, hey, the floor is in and we think we're going to bounce off of that. So the delta flow was bullish up until about 9:35, taking a little bit of a hit right now. And looking at the S&P 500, same thing. Seems like things turned a little bit at 9:35. The flow was a bit constructive, and that was the first 5 minutes. And now the next 5 minutes is turning a bit more bearish. So a little bit of whipsaw, a little bit of choppiness. I think it's just more appropriate than anything else just to be kind of patient here and really just watch this key level at 5,200. I would love to see it bounce here. That's a very playable thing, because if you think it's going to bounce, you could take on minimal risk. If you're like, yep, nope, I want to buy at 5,200, your risk is right here. It's the intraday low at 5,193. So if you are wrong and it's pretty close, so you might get tagged, it's a small loss. Well, then if you're right, you might get to ride it all the way back up. So minimal risk to potential optimal reward. It's not my favorite play, especially given the time of the day. I personally think it's a little bit early, but just kind of very quickly talking about the risk to reward paradigm. Yeah. That is a nice amount of reward to a little bit of risk. Those are the opportunities that you want to seek out time and time again. So I would be very interested to see if this play works. If we start to bounce right here, buy or step in at this nice open interest level. There are quite a few players at this level. There's a decent amount of open interest right here. It's also a psychological level, and it's also just a hair below the extreme that we saw yesterday. So if you're feeling bullish, you don't chase out of the gate. You wait for opportunities like this where you're like, okay, maybe it rebounds. And if you're wrong, okay, you suffer a paper cut. And if you're right, you get to really rock it. But I would like to see the flow be a little bit better. The Mag 7 is flattening out. Obviously, it took quite a bit of a hit till 9:37, but now it's flat, indecisive. And the SPY is also choppy, but it's no longer like waterfalling, at least. Actually, I'm seeing a little bit of positivity over here right now. Seeing a little bit of positivity. Hang on, I'm trying to bring up the same breakdown on my other monitor just in case I have to do some of my trades. Check this out. Have not traded any of my accounts today. Just wanted to show you this. I'm coming in. The accounts are currently at 59 I'm up 9.6. They started at 50. They're at 59.6. So we're almost complete with the buffer build out. But I can't even really say that because the buffer build out of 20% of going from 50 to 60K, gaining 10K, obviously a 20% gain. That was when vol was closer to 20, not when vol was above 40, above 50. So in this environment, I mean, you're seeing the swings right now. This shit is crazy. Absolutely crazy. So it makes me feel like maybe you do need a little bit more of a buffer in this environment just because our swings are so much larger. So much larger. Even right there, that was almost tempting to buy that. And that was at 114 and we're already down 30, 40 points. Like it's just nothing. We're cutting through these levels like it's hot butter, team. We're cutting through these levels like it is hot butter. Is this breakout real? Nope. Jesus, look at how much we just pumped 40 points to then lose 60. And by the way, I'm looking at the NQ contract. This is the futures contract for the NASDAQ 100. Its symbol is NQ, and then you just have to get the right contract month. Right now, we're on the June 2025 contract. But like, look at just that. Like, it's so easy to be like, get tricked into that. There's just so many tricks going on. Because right there, you could be like, yeah, I want to buy that breakout. It broke out and like instantly just got smashed. Oh, not an easy time, Tonto. Not an easy time. All right, that's an interesting trend line, at least in my opinion. Maybe you don't find it interesting. Maybe I do. The SPY, the Delta is doing a little bit of weird stuff. Let me show you this. All right, so the SPY and the Qs both try to find a little bit of life right here off this 5,200. Like I said, very important psychological and technical level. But it looks like the SPY was trying to trend up, but the Mag 7, maybe it's picking up right here a little bit. Maybe we're getting a little bit of a swing around. Are we? Yes, no, maybe so. It is a little bit of a trend line breakout. Fuck it. Let's see. Let's see what I could do. Obviously, I just moved my risk to that recent low. I'm trading a little bit early. If I were to critique myself in real time from this trade, I do like the technical setup of, okay, cool. We showed some strength. We pulled back. We found a key level. We're trying to bounce off of it. We saw this trend line breakout. I didn't chase the first one. I waited to see, okay, like if there was a fake out, there was, and now I'm hoping that there's not a secondary fake out. On top of that, I have well-defined risk. Obviously, I don't want that to be hit. It's a good 80 points away. So if this risk is hit, I'll be down 1,600 per account. So clearly I don't want that to happen, but that's the only reason, like we have such large ranges. It's just kind of what I have to risk right now. It just is what it is. And what I'm seeing that I like is this. I'm seeing the SPY starting to pick up. So we had this pump, we had this drawback, and then since 937, I'm seeing a general upward trend in the delta. More specifically, I'm seeing puts being closed out, which is kind of what you need, or maybe puts are being sold. Regardless, the put delta is going higher, which can lead to what's referred to as a Vanna rally. For a Vanna rally, you need puts being closed out and you need vol collapsing, which is pretty much the circumstance we might be finding ourselves into today. And that's the play. That's the play. I would love for this to be kind of testing all the way up here, kind of the start of this trend line, because when we get there, I'll move my stop to my break even, and then I just have a free lotto ticket play. If it knocks me out for break even, it knocks me out for break even. Whatever, boo-hoo, I'll get over it. But then on the flip side, if it keeps going, okay, you might catch a nice fish. We're just going fishing today. So like I say, always, is whenever I get into these trades, my risk is maximal when I first get in, because ideally, as it starts to trend in my favor, I'm able to decrease my risk. And in this case, I'd just be moving my stop up a bit closer and closer and closer. So I kind of want to see this test of the high that we saw at 933, 934, 935. It's also loosely around the 18,200 level. So a little bit of a psychological level there as well. So that's what I want to see. And when we get up in this range, I'll move my stop to my break even, and then we'll see if we catch a fish. We'll see if we catch a fish. I don't know. You never know the next bar. And like when I say that, I don't mean it like tongue in cheek. I mean it very earnestly. The next bar, think about what the next trading bar is. It doesn't matter if you're on the 1 minute, the 5 minute, the 500 tick, the 1 hour. It doesn't matter. The next bar, especially when you're already in a position, it's decided by people who are about to trade, people who are trading after you. And you don't know what's going on in their mind. You don't know what news they are or aren't consuming. You don't know if we're getting an update from Ukraine, from China, from Trump, from the White House. That is all new information. That is out of your control. What is in your control is when you get into the trade, ideally there's a setup that you've back tested and you know have good odds, and really you're looking for optimal reward, especially relative to the risk. But once the die is in the air, you are just in control of your exit. You're in control of your profit. You're in control of your risk. And that's it. That's it. You are not like, I wish we could be predictive of what people are about to do. Obviously, I got into this trade at 942. I don't know what the trader's at 943, 944, 945. That's out of my control. I don't know what the news is going to be. There's just certain aspects of this that you have to admit and be like, I don't know. The die is in the air and we're just playing it the best that we could play it. So like I said, we're getting close to that level that I mentioned. I'm going to take all my risk off the table. And when that happens, it's my favorite play because it's a free lottery ticket. Worst case scenario is the market has a sharp turn and I get stopped out for break even, but it didn't harm me whatsoever. And we're pretty much at that level right now. So right here, 39.75. All right, 40. And I'm going to move this up to 90. Okay. That's the play. That's the play, folks. Easy peasy lemon squeezies. It doesn't get much more complicated than that, really. I hope that makes sense. I mean, I literally explained it all to you guys in real time, and now we're just saying how it all actually plays out. We're seeing how it all plays out. And speaking of that, here, I'll put this up on the screen, but I do need to reposition a couple things over here. Ba 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 ba. Oh. All right. Nope. Okay. What do we want? Okay, we're doing that. Good. Good. Okay. I'm just looking. I wrote down an entire plan this morning and I'm just trying to execute it. And in the meantime, I'm hoping that it doesn't come hunting for me at my stop. But if it does, it does. Obviously, it is not what I'm looking for. Clearly, I would ideally not have that happen. Hang on. I'm a little bit confused on something over here. I need to double check one chart. Doesn't make sense to me. What is the gap fill? Huh. Okay. Never mind. I was completely wrong. I was 100% wrong. All right. We'll go back to this. Okay. Okay, we're doing that. Good. Not going to be so stoked if it breaks this low. Obviously, we pumped up. Oops, why is this not working? We pumped up. We got a little bit of a fake out breakout. I'm hoping it can make a new high instead of being this fake out and a deeper pullback. Shit, it is coming for me. Well, that's not exactly how I wanted to start today, if I'm being completely honest. I thought it would be, got knocked out at break even, had to protect myself. And that's, I mean, obviously it's not what you want to see. Clearly it's not what you want to see, but that's an aspect of trading. If something like that bothers you, where you're like up and then it comes back, like maybe just trading's not for you, that what you just saw happens to me a lot. It just does, if I'm being completely honest. When you aggressively move your stop to break even, I get stopped out a lot. And look at that. It came right back. And at this point, I'd be in the green, like whatever. But you have to think about the worst case scenario. There is that situation where, what if I didn't get out there and for all I know, what if something's being tweeted and the trade war gets worse and we start to puke or something like that? Like that can happen. And if you trade long enough, it will happen. So if you're ever putting yourself in a situation where like you could legit blow out, well, if you keep taking that type of risk over and over and over and over again, eventually the bad beat is coming. So even right here, if I held on to that, instead of being scratch on the day, as of right now, I'd be down, and it does look like it's fighting back, and there's a chance if it recovers, I might take this pennant breakout trade. Yeah, I could totally do that. But my point is that this is like one of the things I really, really, really like about futures is there's no pattern day trading. There is no pattern day trading. So you can trade as much as you want. If you're like, yep, nope, I want to be super, super safe. And just like as soon as it goes 10 points in my favor, just break even. Cool. You could do it. You're going to get stopped out a lot and it's going to happen. But every so often, if you just catch that real runner that just breaks and rips, you're going to be swimming in it. You're going to be absolutely swimming in it. So I took a shot. Obviously, it was a little fake out breakout. I thought I wanted it to keep going. And right here, I could have got out maybe a little bit earlier when it made that fresh low and came for me, but whatever. Like you can't think like that because you never know. Like, yeah, what if it does turn a little bit? Like, I mean, you guys have all seen me stream where there's like somehow a miraculous recovery. And right here, I would have been down by about 40 points. I would have been down by 800. So I'm actually really happy with that trade. It went unfortunate, but as I was saying, it like took an unfortunate break, I should say. But as I was saying, I'm not in control of that. I'm just in control of my risk, my reward, how I'm going to handle it, how I'm going to get in, how I'm going to manage it when I get in. I'm not in any way able to influence. Are we bouncing right back? Oh, hang on. We might be bouncing right back off of 5,200 here. Where was the flow? The SPY is actually looking strong and constructive. The Mag 7 took a hit. but now it's potentially rebounding. Potentially rebounding. So I'm going to be patient. I don't need to rush anything. I feel like I was patient and the first one just didn't work, and that's going to happen. What just insane whip we are getting. I'd very much prefer to not have to chase here, like as in chasing the breakout. I think that's a very weak play, especially in this environment, because even if you're right and it pushes and then there's a pullback, right now these pullbacks can be like 100 points. I mean, we just went from 90 to 90 in a couple minutes. We went 100 points of just like a rebound. So if the trade's not there, it's not there. You can't force it to be there. It's like when you get into that negative headspace of like trying to force these trades, that's when I personally find that things like go uniquely off the rails. So I might even take this, but I'd love a pullback first, maybe a pullback to this where I like the whole game is just, can you minimize risk? I could also risk that. What was this high? If I go along here, what would the risk be? 74. That's 50 points. So that's risking 1,000. I'd like to keep my risk under 1,000 though. That's the real kicker here. Oh yeah. What a push back up. If it can pull back a little bit more, look at this, like another kind of fake out breakout. This one right here at 946, we pushed, we pulled back. Then we just pushed again right here at 953, another push where we barely made a high. And this is what I'm saying, the dangers of chasing, because like these pullbacks are just absolutely fucking brutal. Absolutely brutal. What's the options flow look like? All right, here's the look at the S&P 500, long and strong, looking at the Mag 7, decent recovery. All right, now let's just see if I can fine tune an entry. Oh, okay, this indicator is going to go off, but that pretty much is the high. We had this swing low, higher highs, higher lows. We had a nice recovery pump, a little bit choppy now. What do we have going on here? Fuck it, I'll take it. All right. I tried to fine tune the entry. I went into a really small time frame just to look at the super trend, to look at the overall trend, to look at a little bit of a flag, just to try to like pinpoint a better one. We are in this choppy mess, so obviously I'm hoping it doesn't break down, which it actually literally looks like it might be breaking down right now. I'm not in love with this risk. It's a little too far. And I'm not also in love with this risk. It's a little too close as of now. But here's the goal is basically if we break, let me clean up the chart. I think this could actually be a little bit too confusing. I could probably better explain what I'm looking for. If we can break this intraday high right here at roughly 18,200, I don't know, whatever that is, 28, whatever this high was that we saw at 953. I'm seeing this shelf of lows, like a higher low, higher low, higher low, higher low, like all these wicks going up. So I'll probably move my stop all the way to up there. And then obviously by the time we start pushing something like, I don't know, 275, 300, I'll just move my stop to break even. And we'll see if we have another solid lottery ticket. You never know. The first lotto ticket that I scratched off, unfortunately, it was a bust. It was, hey, you get another free play, ideally, and we'll see from there. What is he trading? This is the futures market. This is the NASDAQ futures market. The way hang on. Delta literally just took a hit. Shit. You know, maybe this is better out of sight, out of mind type of a situation. Maybe I should just let it cook for a little bit instead of like watching it so anxiously. The SPY had a nice pop up to 953. It's a little flat now, but overall the trend is up. Looking at the Mag 7 options flow, we had a big pump till 946, a pull down to 951, and now we are once again popping. There was a little bit of a hit right here at 956, which kind of push us back to the lower end of this range, but I'd obviously like to see follow through on both of these and setting it up with these levels. We're kind of coming up to this first target. Remember, this is a big level. We're talking about the high from yesterday. We're talking about a key open interest level. We're seeing the SPY pick up, which reminds me, maybe I should have been a little bit more cognizant of that level with this long position, because we could easily pull back. Okay, so I'm going to have to be smart here for a second and take on the risk that's appropriate. Granted, it's a little bit more risk than I'd like, but it is the swing low, and it's just what I have to do. If it hits, it's not the end of the world. It's a bit of a pain in the ass, but it is what it is. It is what it is. It is what it is. Come on. A little bit of a fake out here. I just got a weird alert that it said order canceled. Why would it shout to me order canceled? Especially now that I'm getting a little bit freaked out that it said that. Do I have all these positions? 1, 2, 3, 4, 5. I think this is all 25. I'm not 100% sure. It just said order canceled. I'm not 100% sure. But it's up a nice $700. All right. Okay, my option is I can't do this middle of the road thing because it might pull back. I think I just need to be straight up aggressive with it and put the stop in. But it's so early, dude, these ranges. Do I just want to do it and have a low risk play? Just risk no money? Yeah, I'm just going to do it. All right, another free play. To be fair, I probably did move the stop a little bit too early. I know these ranges are so big, and I either use this risk, which would knock me out by about, I don't know, $800, or the real risk at this moment's all the way down here, which I don't want to risk that. So if it starts to pull back and it knocks me out, maybe I could just get a better entry with more reasonable risk. It just is what it is, but whatever. The name of the game is to protect yourself, and obviously you should protect yourself however you think appropriate, but I think that's just the best thing for me to do right now. Is I took all risk off the table. This is the second trade of the day. If you're just tuning in, the first trade of the day, I got into it, and you can see right here, I got in, it pushed up, I moved my stop to break even, it went and hunted me. Had I taken on the risk of holding it, obviously I'd be very nicely green right now, but it's just, was the risk worth it? Because I could have risked blowing out my account. So I literally didn't want to take that risk on. So we'll see. We'll see. Oh, it's coming for me. No, really? Holy shit. Save me. Don't do it. It came all the way down to 19 and my stop was at 17. No. If this thing goes, can he pull off a miracle again, folks? It got so close. No fucking way. Look at that. Look how close that got. We were flirting. We were getting as close as Alabama cousins on that one. He can't keep getting away with this. Folks, I am the market. I am the market. Uh-oh. This one's looking a little bit more aggressive. I got stoked at this pump. He can't keep getting away from this. Oh, man. Hang on. We're having a little bit of a struggle at right here. Kind of this called out level. Which I'm not surprised. I'm bummed because obviously I wanted the rip from here. I wanted the rip. But I guess it just is what it is. It is what it is. Oh, I should also clarify, especially if you're new, this profit target, it's not really my profit target. I'm more of trend following. As long as the trend's intact, I want to ride it. So I have that up there just in case there's like some announcement and there's a rip, and that's like kind of the max profit I can make on the day. So don't think that I'm saying, oh, either this hits or this hits. Obviously, I would love for that to hit, but let's just say, for example, I don't know, we pump a bit more and then it pulls back and just starts to look weak. I have no issue like getting out early because, once again, I care much more about this stop. I care far, 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 far more about the stop than the actual target. Where are we at? Well, this doesn't look right. Well, this doesn't look right. This does not look right. What the fuck? Oh, I'm on the wrong day. That's why the options market looks so weird. Silly me, I'm the problem. Who would have thought this entire time that when I look in the mirror, that's my biggest issue? That's the person who's been costing me so much money. All right. We're going to see how this one goes. We're going to see how this one fucking goes. I'm up about 1.2, 1.3K per account. That's a good chunk. All right, we're going to move the stop up again. Whew. Just saved myself another $20 on that move. I moved it from 17.5 to 18.5. Your boy officially locked in an extra $20. An extra Crunchwrap Supreme with maybe a soda, maybe a water, maybe a coffee. But he did it, folks. An extra $20 is now mine. And you guys say I don't know how to trade. And you guys say I don't know how to trade. That 20, dude, I'm going to be looking at that crisp $20 bill as you guys are all just jealous. And you're like, damn, I wish I had another $20. And I've already locked it in. That 20 buckaroos is mine. Your boy's getting free commissions effectively. Palantir's up 9%. Broadcom. Did I have a level on Broadcom? I did. I did. What we? I did. Oh. I would love for this to keep going because we're getting up to good numbers, but we're also kind of having a tough time at that resistance. Palantir's in my notes as well. How does Palantir look? Palantir looks like it wants to fight. Oh, Palantir, what will I do with you? Hey, that's working. Palantir. All right, let's rip a little bit of that. Dude, we are cooking. Go, go, go for America, America. Oh, country, 'tis it. Come on, you guys know this song. Don't let me embarrass myself. Don't let me embarrass myself. You guys know this song. By the way, this is the max profit that I could go for just because of their consistency rules. I really don't want to go too much beyond 3K. Of course, that's just how I choose to trade. And if you want to trade it in a way where you're like, no, I don't care if my one-day profit's absolutely massive. Obviously, all the power to you. All the power to you. I'm thinking about moving up my stop because that locks in at least a grand there for me. Let's see if the options flow is still constructive, if I should still be in this trade. Looking at the Mag 7. Mag 7 is long and strong. S&P 500 was pumping. We just took a little bit of a hit, most likely related to the fact that we are at a very important level. We are at the high from yesterday and also a key open interest level right here. So not so surprised that we have quite a bit of a battle because if the bulls win this fight, i.e. if the bears lose this fight, it's kind of an easy path up to 5,300. I don't see much in terms of technical levels, psychological levels, or anything like that that's going to like upset this pass. So this is like, it's just going to be a big fight zone. Not so stoked with this pullback. Not the most stoked with this pullback. Do I just want to take this money and end my day? I mean, it is a nice $1,000 day. My bias is to be a bit more aggressive. I know I'm not going to lose money. It's a question of how much money am I going to make? Because like I said, the stop's already in here. Why can't it just make my life easy and like not have such extreme fucking pullbacks? And yet it is. I mean, we went from 322 to 240. We dropped 80 points, and that was just a normal pullback. Like, these ranges are so much. Come on, please be the low. I just want to move my stop up to this low. Obviously, as you guys can tell, my strategy is just always move my stop up to whatever like a recent low is. So if we can pop out of this, if we can take back 300, I'll just move my stop up here. So no matter what, it's guaranteeing me a $600 profit per account. Obviously, I have 25 accounts. So by the time you do the math, 600 times 25, that's a pretty fucking nice gain in a singular trading day. A pretty nice gain. Come on. All right. It's in there. If it comes for me, it comes for me. But at this point, taking on a bullish position in this environment, it just is what it is. So it looks like it's roughly 25 points. So it's about $500. So no matter what, I'll make 12 grand. Worst case scenario is I make 12 grand. And if you're upset about making 12 grand, I don't know. I guess you just have a much larger bank account than I do. Of course, I'm hopeful it can keep going and I want it to keep going, but I'm not a fairy godmother that can just wave a wand and make the market go up. Sometimes I feel like that, but those are generally when I have delusions of grandeur. So I'm hoping that this could hold. I'm hoping this isn't a lower high. If it is a lower high, I'm going to be screwed and it's going to fall and it's going to hit me and it is what it is. And then I'll make 12 grand. Of course, I could get out now for a gain of 1,500, or I could be patient and maybe if it does keep going, that's the risk reward. It's like, okay, if I take on the risk of allowing this to drop where I only make 500 per account, if I take on that risk, the potential reward might be, oh, you actually make 3K per account. So it's just like, sometimes you're going to be right. Sometimes you're going to be wrong. Hopefully you're more right than you are wrong. It's just like, yeah, I know some of you, I mean, I could see it in chat. You're just saying, just take the money now, but ask yourself, are you just saying that because you're seeing big dollars and you want to take it? Because when you're a trend following trader, you need the trend on the good trades to like pay off all your losers. So the idea of no one ever went broke taking profits, I hate that saying. It is factually inaccurate. It is factually inaccurate to say that because depending on your strategy, when you have a correct trade, a winning trade, you might really need to hold on to that trade for it to pay off your losers. So this idea of like, okay, you take a loss, and finally you have a winner and you take a winner right when it's a little bit of a baby profit, how's that going to work? How is that going to work? Matt, thoughts later when Trump imposes 50% additional tariff? I don't know. I'll tell you better later. Why do you have 25 accounts? Because if I'm right on one, why not get that same gain on 24 more? You know, like if you make $1,000, that's awesome, but you could do the exact same trade, copy that trade to 24 additional accounts. And instead of making 1K, you make 25K. You know, like what? Why? Like if you're trading well and you're confident in it, like it's just higher. Fuck, is it coming for me? If it does, that's shitty because we made a fresh high. So it made a fresh high. And if we do poke down, that means we have a broadening formation of a fresh high and a fresh low, which is, in my opinion, the worst setup to trade because the bulls are a little extreme. The bears are a little extreme. So I hate that. I hate that. How much you bought? how much you bought for each account. So what I'm doing is referred to SIM funded trading, as in I'm trading with someone else's money. Right now, there's many firms that do this. Right now, the cheapest offer for you guys is Take Profit Trader. Here, I'll pin it to the top of chat just so you guys can have it. Where is it? Here, I'm putting it in chat right now. Replace pin. Here, I'm putting it in. So like I said, there are many firms that do this, and basically I would say don't be like beholden to one. Just always use the one that is either the rules are best for your trading style, or it's the current cheapest offering, or whatever. But what I just showed you, Take Profit Trader. Sorry, I went over this so I could watch the trade. I'm not loving the setup right here. A little bit of a fake high. That's kind of looking a bit weak. And in reality, we're just going choppy sideways. But we're choppy sideways where my stop's in the chop, which makes the trade a little bit more complicated. It makes it a little bit more complicated. Whoa! 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 It almost got me. It almost got me. No way. No fucking way. Can he pull it off again, folks? Fucking call me Mystic Matt. Holy shit. Holy shit. He does it again. He pulls a fucking rabbit out of his ass again. How does he do it? Dude, if I were you guys, if I were a viewer of this show, I would be so fucking eternally angry all the time. I would be so, if I were you guys watching me, I'd be punching the air. I'd be punching a baby just because of how enraged I would be. Like, how does this motherfucker get away with it every single folks, I'm just that good. I wake up in the morning, I call up the market makers, and I'm like, yo, what's the plan today? Where are we going to see the highs? Where are we going to see the lows? And they tell me. They're like, all right, this is what we're going to do. Make sure you have your stop set here. We'll make sure to stop it like right beforehand. It's how it works, dude. It's how it works. That's so fucking extremely lucky. Oh, man. I wonder if I should keep pressing my luck, or if this is a sign to just take the money. I'm trying to read it. Is it so lucky to keep riding it? Or is it being like, dude, the market's giving you like a gift, like take it and get the fuck out of here. Yeah, I piss excellence. Yeah, sorry guys, I piss excellence. I am definitely not out of the woods, because we are not, like, we just came right back up to like this equilibrium point and we are battling. Do you think that the market's afraid of my stop loss? They're like, dude, we don't want to. Well, I told you, folks, to be completely honest, like for those of you who were early here early today at the start of the show, I told you this is a day to do everything in your power to make yourself as lucky as possible. And then I explained it. I did various rain dances. I put on my lucky shirt. I put on my lucky pair of underwear. I was walking under ladders. I was talking to black cats. I was doing everything. I was literally on my roof this morning in New York, just hucking horseshoes off the roof. That's what I was doing. I was doing everything. And you might be saying, Matt, that sounds super illegal. What if the horseshoe hit someone at the base of the building? You could have like caused serious harm, even potential death. That would be murder. That would be a homicide. And all I have to say to that is, how committed are you to trading? Seriously, like that's what we would call an excuse. And if you're not looking yourself in the eye every single day saying you will do whatever is necessary to be successful, why are you in the game then? Why are you in the game? Like all I hear is excuse. Man, I can't go to the top of a skyscraper and throw off horseshoes because I don't live in New York. That I do live in New York, but that's illegal. I might hurt someone. All right, whatever. I don't know what to tell you. I'm not your mom. If you're not going to put in the proper steps and effort day in and day out to make money, I can't make you. You can lead a horse to water, but you can't ride it over it. I think that's what Jesus said, because he walked on water. It's something, you get the point. I don't remember the story verbatim, but you guys get what I'm saying. So it's just, at a certain point, you just have to be realistic with yourself. Either you're going to do it or you're not going to do it. You know? Morgan Wallen, Matt's the Morgan Wallen of trading. Yeah, didn't he like huck a chair off a bar in like Nashville? Oh, in reality, I know this is fun to watch, but we're really actually not trending. We pumped up, we came down. We pumped up to pretty much the same level, came right down. We pumped up to pretty much the same level, and I wouldn't be surprised if we come right back down. Like in reality, we kind of lost our trend at 10:06. And I think it has a lot to do with the fact that we're just so, I don't want that big. The market is very much viciously battling it out at yesterday's high and this key level of 5,250. That's a big open interest level. That's where we're getting kind of caught up. And it makes sense that we're battling there because on the break, I really do think it's an easy push all the way up to 5,300. I do. Hang on one quick second. I had a Jimmy Neutron brain blast, if you will. A Jimmy Neutron brain blast. Okay, there is literally no orders there. No orders there. No orders there. No orders there. And no orders there. Well, that doesn't quite make sense now, does it? But there's orders on all of those. 349. This is 349. Sell stop market. Access is denied to 349. Why would my access be denied? What does that mean? Why the fuck is my access denied? What in the world does that mean? Well, we got close to my max. Why would they're all trading? I'm having a weird data issue right now. Okay, 1785 and 13. 1785 and 13. 13, lucky number 13. 13. 75. 85. Okay, so I need to do lucky number 13. I'm on the wrong account. That's why. Your account is currently... What the fuck is going on with these orders? Your account is currently set... I don't know what the fuck these mean. I guess I just need... That is the close order. I'm getting weird order shit. I don't know what's going on. It looks like my Apex is working well. I think I somehow messed up my copier. Anyway, what you see going on right here, I have 25 different accounts. So basically, it's called sim defunded. You sign up, you take a test. If you pass the test, which is hitting a certain profit target without having a certain unrealized drawdown, you pass the test. When you pass the test, you get moved from an eval account to a performance account. And then once you're on a performance account, PA, performance account, same thing here. These are all performance accounts. If you trade well on those, you can get actual money. So it's a great way to trade, but you minimize your risk because your risk is just the fee to pay for the challenge and then also to potentially upgrade. But right now, certain ones have no fee to upgrade to go from, like I said, the eval to the performance. So for example, right now on Take Profit Trader, also known as TPT, those are these accounts, TPT, Take Profit Trader. You're allowed to have 5 of those. And right now you could get 30% off with the code Goonie, 30% off, and there's no activation fee. So in the event when you pass the eval to upgrade from eval to performance, there's no fee whatsoever. So right now, this is the best financial offering. Like I said, on Take Profit, you can have up to 5. That's why I have 5 of them. On Apex, you can have up to 20. All these firms, they're very similar. They have slight nuanced differences. So I recommend you check those out and see which one has the best financial offering, which one has the rule set that is most accommodative for your trading. My personal favorite is Apex and Take Profit. That's why I have 20 Apex, which is the max amount. That's why I have 5 take profit, which is the max amount. I could have 20 of those and 5 of those. The 20 and the 5 are set by the company. There's other companies that allow you to have differing amounts, but once again, that's just a difference in those two. My favorite is Apex. Right now, they're running no special deal. And then the other one is Take Profit. Take Profit is the one running the deal. Pinned to the top of chat in the description of the video. Use that code Goonie. You get 30% off for life, and you never pay an activation fee. 30% off for life, never pay an activation fee. I think it's this SIMDA funded stuff did not exist when I started trading. Basically, I had to go from learning about trading, paper trading, and then I basically had to jump right into the fire, trading my own fully funded account. This is a very, very, very nice in between where you have a little bit of risk in the game, obviously the fee to take the challenge, but then if you do well, you can get actual money. So I love this as an in-between step because with it being an in-between step, what the fuck is going on here? I don't know why my take profit, I'm getting weird messages. I don't get it whatsoever. And the orders are now not showing up. I think I messed up something with my copy trader, which once again, that's another thing is I'm trading on one account and then with a trade copier, which is a piece of software you could get, you can copy your trade to how many ever other accounts you want. So that's exactly what I do is I trade on this account 521, which is probably this top account. And then the same trade is copied to the other 24 accounts. So you don't have to do it that way. You could copy it to a couple other accounts and then on other ones, like you could chunk it out. I trade them all together. That's just like a personal thing. You don't necessarily have to engage in the market the exact same way I do. I'm just literally letting you know what I do and how I do it. I would love for this just to keep going here. We got kind of close, but I guess close only counts in horseshoes and hand grenades. What the fuck is going on? I'm just so thoroughly confused about how I already messed up. I thought I set up the copy trader properly this morning, but I guess not. I guess not. We'll see. We're just kind of dancing around. We got a nice push, but ever since, I don't know, about 1017, looking a little bit suspect. I would very, very much prefer that we hold 300. Just a nice level to bounce off of. So I would love to see this taken out. But anyway, right now, Take Profit is the best deal. Use that code Goonie. You have to put in that coupon code to get the deal, 30% off, and never pay an activation fee. It'll save you a good chunk of money. Oh, fuck. Do I just want to get out now? I'm not liking that. I'll give it like a little bit of a shot to get back above 300, and if not, I'm closing out. I'm trying to give it one little breather here. Come on, Tonto. I'm trying to see if buyers are stepping in at 300, but if this is seemingly not holding, that's my trade on the day. Well, technically it's my second trade on the day, and I will be the fuck out of here just because sometimes the market gives you exactly what you want, and other times you're living in hyper volatile environments, and sometimes you got to get out when the getting is good. What are you doing? Yeah, I mean, we were looking good, and then we got some, I guess, profit takers coming in at 1023, and it's just the S&P 500 is having a bitch of a time holding this breakout, the exact level that we talked about. It's yesterday's high, but it's also this massively important open interest level. I'm kind of hoping this is just the realistic retest, and then we can bounce and rip. Like, we held of it, okay, we're testing, and then we go off to the races type of a situation. But I need to kind of have my finger on the trigger just in case like this is actually a failed breakout. Part of me is actually wanting to move my stop up even more to whatever this low is. And by part of me, I mean, I really, really like that idea. Two standard deviation moves all the way up here. If we get going, like there's a lot of upward potential in this. But that's a big if because as I showed you, the S&P 500 is on a little bit of the struggle bus right now. Let me show you the flow. Here's a look at the Mag 7. The Mag 7 pumped up until 1023, and then we had some profit taking. Not much, but it's enough to, here's what happened, is huge amounts of profit taking relative to what's going on. You could see the delta just puked starting right at 1023. More specifically, someone for whatever reason bought 0DT calls, the put delta dropping and also the call delta dropping. So probably a new bearish position just in case we get rejected here, and probably some profit taking. And it makes sense because like if you want to be bearish here, your risk is minimal. The same reason it made sense to be bullish at 939 when we talked about it, of like, okay, if you're right, huge reward. If you're wrong, small risk. It's the same thing going short here. You have small risk, and if you're right, you get to ride it all the way back down. Is that going to work every time? No, but you're looking at it as a series of trades of optimal risk to reward setup. So with that being said, I need to be smarter. I need to be more protective of this play. So I'm moving my stop up. I'm up about 60. So I'm going to make 1,200 no matter what per account. And then if it goes all the way up, even better. Even better. So like, I don't know what as I said at the start, I don't know. The die's in the air. I'm just kind of watching it. I'm at the crap stable saying, hey, let's see how this plays out. But the key here is not the profit target. Like whatever, that's up to you and have fun. I hope you make a shitload of money. But to be a successful trader, to survive this marathon that it's trading, it's how good are you at risk management? The best traders are not really traders the way we would normally think about it. The best traders are people who are just absurdly good at risk management, like stupidly good at risk management. And that's all they think about. That's all they talk about. That's all they dream about. That's all they do is manage their risk, manage their risk, manage their risk. When you guys have seen me live, if I'm trading well, it's because of a fucking absurd focus on the downside risk. And hey, if the profits come, they come. But like you're not going to be in control of where the market's going to go. What you can be in control of is when you decide to pull, oh shit, something must have just been announced, or I don't know, vol's picking up. It got real close, and then all of a sudden it dropped from 57 to 92 like it was nothing. We dropped 60 points just because. 60 points just because. Dude, I feel like I've been in this trade forever. And it just keeps getting so close. Oh, I should clarify that there's nothing special about 67.25. I just put that in there because I believe it's roughly where I'll be maxed out. Roughly. It should be about 3K worth of profit, which actually technically it would be 68 right there. Maybe it hits, maybe it doesn't. I would love another little push right here, taking out 40 so I can move my stop up. Guess what? Once again, to the recent low and just see how long I could ride it. Oh, part of me is really wondering if I should just say fuck this and get out. Something's going on. Things are getting a little bit more whippy. You see how quickly all these bars are being painted? Is something being announced? Yeah, okay, something is going on. U.S. Trade Representative Greer, higher reciprocal tariffs will go into effect tomorrow. We already knew that. That's not news. That's not new news. I don't know why the market's reacting to it. We knew that. China, it's coming for me. I don't think I'll be able to. Folks, what? I feel like I literally had to stop. I was like, I think it's coming for me, and it bounced. All right, it finally came for me. All right, these ones, I don't know what's going on here. None, close, access. Why can I not? Something is going on with this data. Liquidation only. I don't know why these are. I don't know what's going on. I mean, it's up money. You see me trying to close it. I really must have messed something up. Cancel all orders. Cancel all orders. I really must have messed up my copier this morning, and I don't know how I did that. Anyway, regardless, don't worry about the take profit right here. Locked in a nice 1.1K on all 20 accounts, made 20K. Of course, I wish it went higher. It's just, we started to pull back. We broke those lows. I didn't necessarily want to take the risk. It just is what it is. Obviously, it could turn around. We're seeing, I got really close to my max hit. I needed about 10 more points. I got out on this particular breakdown. It's unfortunate, especially because it looks like literally right now in real time, it's coming back. Oh, brother. Here's what's being announced. I'm hearing some alerts. What are the alerts? Meta. What's going on with Meta? Meta breaking down. Palantir, a breather, Nvidia. All right, so things are actually turning right now because of whatever this guy is saying. Let me go through this because it's apparently seemingly important for whatever this little market hit is right now. Apparently, this is important for whatever the hell is going on. U.S. Trade Representative Greer, China has not indicated that it wants to work toward, the reciprocal tariff. They don't want to be involved in this right now. Higher reciprocal tariffs will go into effect tomorrow. We knew that. India Trade Minister, discussions with the U.S. on bilateral trade deal are going in the right direction. That's once again with India. Many countries have said they won't retaliate. Some have already lowered tariffs. That's from Greer. Spokesperson of the Chinese embassy in India, we're facing U.S. abuse on tariffs. China and India should stand together to overcome the difficulties. The Trump administration is open to ideas from other countries to achieve reciprocal trade. China made significant changes early in phase one trade deal, but did not comply in large part. Okay. Interesting. I wonder. I mean, we are holding these lows right here. Is it going to start to pick up? Meta taking a bit of a turn. Tesla, a little bit of a turn, but seemingly bouncing. MSTR, a little bit of turn, but maybe bouncing. Apple, Microsoft, Nvidia. So everything right before 10:30 took a bit of a hit, maybe a little bit of an overreaction. I don't see anything new, but we could even see it here. Look how big the delta got hit. People definitely started taking their profits. I mean, you could see this giant trade right here at 1028. That's exactly where we saw like the market whip down and whip back up. And then unfortunately on that little bit of a bounce, it couldn't really catch itself. And then the delta puked again. More specifically, we saw calls being locked in. The call delta dropped on the all expiration and on this Friday's expiration. So you could see the delta swung low right there. So it looks to be stabilizing right now. If it starts to pick up, that obviously might just be another long entry trade. We're seeing a little bit of confusion behavior in the S&P 500. Looks really jagged, not nice flow today. How do I want to do this? How does old Mateo want to play this game today? I should kill this copy or make sure I have it set up right because I don't know what the hell I did. Oh, okay, we do have a little bit of this trend line break right here. We do. We're back at that 300. If I took on the risk and held, I obviously would have been fine. I could play with the house's money. Maybe we're potentially bouncing right here. Where's SPX? I could risk. That risk wouldn't be bad. I'm looking obviously at the swing low at 1031 and the swing low at 1034. Basically, I could risk the house's money. Like if I choose to take this trade, the worst case scenario is I just go to zero, not going to red on the day, which maybe is something to consider. What time it is? It's 10:35. Not the worst time for a trade, especially if we are actually bouncing off of 5,250 here. Kind of seeing this could be like a shoulder head shoulder, which would drop it. Or it could just be whatever, 1, 2, 3, 4, 5 different tests and we bounce off of it. It seems very indecisive right here. Very indecisive. And then that's kind of being represented. The Mag 7 started to pick up. Let me go to the 30-second just so you can see it a little bit more clearly. So basically from 9:51 to 10:23, we were looking good. Someone basically took their profits and caused this drop to 10:31. Then people started to come back in, and now we're going flat. So clearly, like, the trend is still obviously up. We're not at a new delta high. I think what's messing this up is the flow on SPX. Same thing was someone started taking profits at 10:23 and kind of messed it up for the rest of us. But we are still holding this support. So we're kind of like in this super awkward, indecisive area. Like, we got this trend line test. It's always the game. You never know where it's going, folks. You never know. Don't let anyone tell you that they know where it's going, because it's all bullshit. It's all just, are you going with the trend? Are you going counter trend? And then on top of that, are you getting in with like good risk reward? All right. Obviously, that was not an honored trend line. Maybe a little higher low here. Maybe. Kind of watching this structure. Higher low, higher low. This might be another higher low. We broke that. That's exactly where I got out, but then we did find nice support. Looks like it's trying to decide, does it want to be above or below this EMA? Just kind of watching this structure, also just considering what the risk would be at various entries, because like sometimes things look bullish, but if it's gone too far, you're taking on so much risk that you don't want to chase it anyway. That's why generally chasing is not a good idea, because by definition, you're probably most likely buying it at resistance, praying for a breakout. And if you're doing that, if you're buying it at an extreme of the day, like the current high or the current low, there's a really, really, really good shot that you might be just taking on the most risk possible, by definition, the farthest away from your cut level, your support level. Well, I'm happy I didn't chase this at first, because I'd be in at 88 and I'd be sweating a little bit right now. But I'm just wondering if if we can stick with this trend of a higher low, like, can this actually stick? Obviously, I'm kind of watching that trend line as well. I'm thinking about playing again, just because I know how much this could get going if it gets going. It's just, how can I keep it where I'm only risking what I've made on the day? So just in case I mess it up, I'm actually not going down any money today, which having a scratch day is completely fine, especially in an environment like this. All right, I'll take this trade. And of course, I did the wrong thing, the wrong trade. Order cancels order. So I think this is the max I could go for. All right, so that's the max, but as you guys have literally seen now for the third time today, the thing I care most about is the risk. So I'm hoping that this breakout isn't a fake out breakout. I'm hoping it's very real. I'm hoping that the market continues with its current trend. Basically, I'm just playing this bounce off of 5250. It's a key level. I'm choosing to express the trade through the NASDAQ just because I like trading NQ better than I like trading ES, but it's literally going long off of like a breakout support. Maybe it craters, maybe it doesn't. All I can tell you is this is my risk. This is my potential reward. There's much more reward than there is risk. So even if you're right half the time, you're going to be massively profitable. Honestly, with this type of reward, with this type of risk, even if you're right a third of the time, you're still going to be net profitable, which actually comes back to like why bet sizing is so important, just so you can withstand some of the unfortunate drawdown of variance. Like sometimes variance is just like not on your side. So beyond having a quality trading strategy that you have solid risk reward, you know how it's played out, that type of a thing. The other key there, and potentially even more important, is really your bet sizing. The more and more I do this type of stuff, the more I'm becoming convinced that maybe bet sizing is the most important thing. Shit. obviously for me, I'm just trading a singular contract right now. So it might be another fake out breakout. I hope that it's not. I hope it could quickly recover and come up here, because if we start to snap this, I'm going to be quickly giving back all of that money that I worked to gain today. And I'm not going to be so thrilled about that. I'm going to actually feel a little bit stupid of like, why'd you come back for another bite of the apple? But I mean, the setup was there. Like the setup is there. And when the setup is there, it just is what it is. And hey, sometimes it's going to go your favor and you're going to feel super, super smart, super, super lucky. You're going to get that hit of dopamine. And other times the setup could be there. You could be dealt pocket aces and it could still just get completely thrown back in your face. It just is what it is. I waited for the push. I waited for the pullback. I waited for the additional push, the new trend line, the break. I waited for everything, went a little bit in my favor, and then quickly just got smoked. It is what it is. And from here, I don't know. Maybe this nosedives, hits my stop. That's why I have my stop. Or maybe it finds support right here and rips and hits a new intraday high and I make a shitload of money. You don't know. Remember, we were speaking about this in the Discord yesterday, and I think it's very, very important. Do not judge the quality of the trade on the outcome. There is a very real chance you could do a super good trade backed by the stats and your strategy and solid risk reward and still lose money. That doesn't make it a bad trade. It just means the trade didn't go in your favor. And on the opposite side, you can do a super degenerate trade, like something like buying at severe like resistance and your support super far away and vol's not on your side and you're going against the current trend. And you could still be right. And you can still, basically, it's like in poker, you can lose being dealt pocket aces and you can win playing a 7-2 offsuit. You can lose with the best hand and still win with the worst hand. And that is very true in trading. You can do all the proper things and still somehow lose money. You can do all the wrong things and still somehow make money, which is exactly why you should never judge the quality of a trade off of does it make or lose money. Of like what you care about is making or losing money in the long run over a series of trade, over the marathon that is trading. And for you to do that, basically it requires a succession of positive trades, time or positive decision making time and time and time again. That's how you win this game. I promise you that's how you win this game. Trading is starting to pick up right here. Vol is picking up. What's going on? Is there another announcement? I'm seeing things get really, really whippy here. Like real whippy. Just tagged me out. All right, slightly red on the day. I might be done because something is going on with the news here that like all of a sudden there was just a burst of trading. U.S. Trade Representative Greer, the best way to have pricing certainty is to build products in the U.S. The price challenge from the Trump tariff, reciprocal tariffs are generally lower in the Western Hemisphere. I see a distinct difference between China and other countries that are seeking to negotiate. So something is being said that just like we just saw a series of bots trading, and we snapped this level right here. We snapped 5250, which is exactly why I got out, because I don't necessarily want to be in if there's a return all the way down to what we saw earlier. All the way down. That would not be the most ideal situation for me, which is why I have my risk. So I took on the risk and basically I went slightly red, risking the house's money. It is what it is, because on the flip side, you could have it very easily could have just kept going and then I would have made 3K per account, 60K. Like it just, this is what it is trading. Like if your expectation is to make money every single trade, every single day, you're setting yourself up, unfortunately, for severe loss, because that is just simply not how this game works. There is variance. There are things outside of your control. There's random tweets. There's random updates. There's just so many things that are going to be impossible for you to model. So as much data and information as you take in, you also have to be accepting of the fact that there's just going to be some things you do not know. You just don't know it. You don't know the random updates. Yesterday's a perfect example. Huge update that caused from trough to peak. We rallied 8%. And look at that. We bounced right back up. As much as we can quickly bounce up, you can also get smashed. Like it's unsettling because we look at this as if like there's a perfect model. And if you do the right things over and over again, you expect that positive result of you making money. And that's why I think, this is so maybe enticing and intriguing for so many people, is because like we're kind of, at least me, like you're almost wired to be like, okay, I can solve this puzzle. but there's really not like a one set solution on individual setups. And that's what I think drives people like absolutely fucking bonkers, is you're expecting every single trade to be a winning trade. And what you can do is solve the puzzle in terms of being a net profitable trader in the long run. That is totally possible. Like that is 100% possible. But on every given trade, let me just put it this way. The best trader in the world, Jim Simons, running Renaissance Technologies, recently passed away. He made $100 billion, billion with a B, in the stock market. And he was only right just over 50% of the time, literally not even 51% of the time. And yet he was massively net profitable. He made $100 billion in profit being right 50.75% of the time. Like slightly over half the time. And he made $100 billion, which means you don't need to be so hell-bent on being right all the time, because if you have a super high accuracy, it most likely means that you are going for lower profit targets and taking on more risk. That's like the common setup. While other people who have low accuracy, like maybe they're only right 30% of the time, it's not so surprising to find out that they have very large average wins and very small average losses. And you could be profitable with either of those. You could be trend following and not right that often, but when you're right, it's big. You could do mean reverting when you're right more often, but you have small wins and kind of unfortunately some larger losses. Like you can be net profitable in either of those. I'm not saying one is better than the other. It kind of depends on you, your personality, how you view the market, how much time you can dedicate to the market, like that type of a thing. I'm not saying one is better than the other, but I do find in the retail trading sector, there's this idea that like there's a system or strategy out there that is right all of the time. And that truly does not exist. I'm sorry to be the bad news messenger here on this particular news, but there's no strategy out there that is right all of the time. There are strategies out there that are right in the long run, 100% in the long run, that if you take it time and time again, yeah, you're going to have some wins, you're going to have some losses, but the time it all nets out, you'll be net profitable. That fully exists, and that exists in the stock market, the options market, the futures market, the crypto market. It exists everywhere. But there's no such thing as a strategy that is literally right all of the time. Folks, even when Nancy Pelosi has to admit some of her losses, I think that kind of tells you something. I think even when Nancy Pelosi, the truly clairvoyant person of the stock market, even when she has some losses with all that insider info, her and Paul, I should say, I think that kind of tells you that, okay, you're in this game and it's a game of just the net differential. You can't be loading the boat up too much on like one individual instance. But yeah, that breakdown was not so good. So I'm happy I had my risk, because obviously I'd be off by another, I don't know, $50. I'd be down by like 1.5K. So I'm very happy with how I handled it. I got unlucky that it just didn't go my way. I thought this breakout was the real breakout. I thought that was actually going to be the trade of the day and it was going to rip. But something going on with the market, and Greer, the trade representative, is obviously causing it so 5,250 does not hold. So we spoke about this. Yeah, you could see, this is what's a little silly about technical analysis, is the fact that we know it broke down right here. So let me show you this. Without knowing where the market went, there's going to be people who care about technical analysis and be like, yeah, of course it broke down. Shoulder, head, shoulder. Head and shoulders is a bearish pattern. It also broke down. And you're saying that now because you know that it did break down. But if I just showed you this, you could say it's a shoulder, head, shoulder. You could also say it's a double, triple, quadruple bottom and we're basing and then we bounce off of it and just look for this trend line breakout and we rip. Both of those as of 10:39 this morning, both of those are true. And that kind of tells you a little bit about technical analysis, really, is you can have both a bullish and a bearish call out be true. So how do you know which one to take? And that's where I would say that I'm definitely by no means against technical analysis. I'm just saying know when to use it and know the reach of it, the limit of its capabilities. There's no such thing in terms of technical analysis or indicators that is an end all be all of like a perfect thing. It's not like this is the perfect setup and you should take it all the time and you're going to make money. There's no such thing as like, I don't know, EMAs or RSI, that it's like standalone, the perfect thing. That's a very, very rare thing to find. But just to like in real time, this is a good example. Shoulder, head, shoulder, and all the people who were bearish bias are going to say, yeah, obviously we're going to break down. But on the flip side, without knowing where we went, we could have easily pushed 5260 in the very next bar, and everyone would have been like, yeah, we're just, if anything, it's a double bottom kind of a W setup, and we're just basing and we bounce off of it, and it's evidently bullish. So to me, when you have that, it's a lot of what I would consider to be Monday morning quarterbacking. I would say that is a lot of Monday morning quarterbacking of people loving to call it out after it already happens. It's very, very rare that you have these technical people calling it out, the price movement with super high accuracy before the price actually moves there. Generally, you get these videos and these updates and these whatever pieces of education that are people saying, look, I told you, and like they point it out after the fact. What is the point of trading after the fact? Because if it's after the fact, that means you didn't make the trade. You have to know it, like all of these things, whether you're looking at indicators, technicals, options flow, you have to just gather the data you have in real time. You do not know the next bar. The very next bar, whether being green or red, whether going up or down, on any time frame, you pretty much have a 50-50 shot. Really. That is the normal distribution of the market. With a slight, on the daily basis, there is a slight bullish bias. But in reality, like just for what we're concerned in, whatever time frame you're on, you're looking at the 1 minute, the 5 minute, the 10 minute, the 50 minute, the 30. There's been an extensive amount of studies done on this. The next bar, whether going up or down, you have roughly the odds of flipping a quarter. Roughly the odds of flipping a quarter. Like I said, technically on the daily chart, if you're looking at the daily, it's about 54% of the time it's bullish. So 54 to 46. So pretty much still flipping a quarter. It's really not that much different, but there's a reason why in the long term the bulls do win. It's because they do have a slight built-in edge. The way you go to a casino and there's always an edge, like the house is always favored to win. That's kind of how the stock market is like the bulls are always favored in the longer term, and it's day over day. They have roughly a 4% edge. But for the sake of this conversation, we're talking about intraday action, like anything smaller than the daily time frame, everything from the 1 second up to whatever, I don't know, the 4-hour chart. If you're you have to understand that it's flipping a quarter. Does it go up? Does it go down? It's effectively flipping a quarter. Yeah, you can get into situations where you're like, well, hang on, I saw this setup before and I back tested it, and over the past 5 years, whatever. Maybe there's a 5% edge, something like that. But really, like when you're in this game of trading, it's about 50%, whether going up or down, and plus or minus 10%. So we're in that tranche of 60 to 40. And with that, I think, like in a roundabout way, what I'm trying to explain is that's why you need to focus on this entire thing. Your journey as a trading of is exactly that. It's not just a journey, it's a marathon. You're looking for those setups, the good setups, time and time again, with proper bet sizing, because even with the best setup, you can still lose because the market is very efficient and it's essentially normally distributed. So you just sit there and like, yeah, you're going to take some losses. You're going to have some wins. What you should focus on is being net profitable in the long term. That's the long term. And I find, especially in the retail space, and this happens to me too, is sometimes you get so excited about singular events that you end up over betting on that singular event, even waiting for the perfect setup. And what's worse is you're going to hit some of those and you're like, okay, yeah. So like, in your, whether consciously or subconsciously, you almost start telling yourself that it's like okay to take those style of bets. And in reality, it's not okay. Like you always need to know exactly what you're doing with your sizing relative to the odds of the current situation. And speaking of the odds of the current situation, I mean, most retail traders I know don't even know the odds of the situation. They're literally just guessing. They're like, hey, I think we're bullish today. I think we're bearish today. And you ask them why. And it's something they're like, well, XYZ happened. And it's like, oh, well, have you tested that? Like, do you know the odds of that? I feel like a lot of people they convince themselves that they're trading a strategy where they don't even know if it's a profitable strategy or not. I mean, like, let's just say, for example, last week, if you just took a new trader and then you showed them it and they just collected a little bit of data, you'd be like, okay, yeah, it's beneficial to go short at market open and take my gains at market close. And I think that's going to be profitable because they saw it happen a couple of times. When in reality, if you did that actually, like over the long run, if you went short at market open and covered your position at the end of the day, even though that would have been profitable last week and you would have made a lot of money, if you do that time and time again, it's only a matter of time before you completely blow out your account. So I think there's, for whatever reason, a bias to use a couple data points, like just a little couple data points, especially when I see people using a singular data point. It's referred to as recency bias and anchoring, but people love to use just what happened the previous day. They're like, well, yesterday this happened. And they like, it's such a superficial analysis of the overall situation. And they're like, okay, yeah, it happened yesterday. So like, I think it's just going to happen again today. It's like, why? Like, what are the odds on that? And like, it's when you dive into that, like for your own trading and start thinking about it of like, how often are you actually trading in a way that is truly backed up by like actual numbers? And I think when you're honest with yourself, you're going to say, well, actually not many of my trades are backed up by anything. It's a lot more gut feel than anything else. And, with that being said, you're probably not profitable. I very much hope you are profitable. But those are the types of things you want to consider to like really survive this gauntlet that is trading. And as you're working on your strategy, like one tip, just because like I don't want you guys to be like, well, what do I have to completely quit trading until I've like mastered a strategy and done the back testing and the robustness testing and the variance testing and the seasonality testing? No. What you need to do while you're like building out your strategy is be hyper focused on the other things that we already spoke about. And more specifically, I'm referring to when you do these trades, really be specific with your risk. How much risk are you actually taking? Not just in the trade of how far you're going to let it go against you before you get out, but also the size of the bet relative to your account. I think a really, really good rule of thumb, it's tough because if you look at like professional money managers, they're going to tell you shit like, never risk more than 2% of your account. And like, that sounds good. And it's probably right. But if you're here, there's a good chance that you like kind of enjoy active trading and like feeling that. So like, I think if you can keep the blows to your account, 10% is kind of extreme. If you could keep it below that, that's good. 5% is probably a little bit better. But just whenever you're about to do something, just ask yourself this simple question. If this goes completely wrong, like if you put in your trade and you're top ticking or bottom ticking and it goes the exact opposite way that you didn't want it to go, ask yourself, how bad will it actually be? And if you're unwilling to accept that consequence, that just don't take the trade or size down or do something different. But I find that there's too many people that even if they ask themselves that question, they ended up doing it like after the fact. Like the trade's already on and then they realize, oh, fuck. Like, so for me, you guys obviously saw some of my trades today and I figured, okay, I was up 1.1 and I put my risk and you can see that I got a little bit of an unfortunate fill. Like there was a little bit of slippage putting me about 10 points into the hole, about 15 points into the hole. But look if I held on to that, if I was like, no, it has to come back. These accounts would be basically blown out right now. I'd be absolutely destroyed at this point. So you just got to protect yourself. I literally just basically did the backwards math and said, okay, I'm willing to risk what I am up on the day. And fuck, obviously at this point, I wish that I ended up just fading it because I would have made more money. But once again, that's a game of woulda, coulda, shoulda. That is like no one at this point at 10:39 this morning was super eager and super confident in being bearish today. Obviously, that's how it broke, but that's like, it's just so much hindsight bias. If I show you this picture right here, there are very few people who would be super confidently bearish, regardless of time frame, just showing you this like charting setup. Just that, not knowing options flow or anything else. There are very, very few people right here who'd be like, oh yeah, I am shorting the hell out of that. I am shorting the hell. No. It just so happened to broke in such a way that we are actually almost at an intraday low, which actually brings up this interesting right here. Bringing it back to Edgeful. Remember, you get a free 7-day trial pinned to the top of chat in the description of the video. What we have going on right here, where's the normal extension? I want to see the 1 hour by wick. I do want to see the by performance. So this is really cool based on whatever underlying you're looking at. I happen to be using the SPY. From there, this is the breakout range, and it just so happens initial balance is what's called the first 60 minutes. So for whatever reason, if you have an opening range breakout, a lot of people consider that to be the 15 or the 30. But then when you use the exact same concept, the first hour of the day, it's then called initial balance, even though it's the exact same thing. The only difference is the size of the opening like bar in terms of time. So for whatever reason, when people use opening range, it seems to most of the time being referred to the first 15-minute candle or the first 30-minute candle. But for whatever reason, when when people go to the first hour candle, then it's called initial balance. And right here, we are about to break it down. Did we? We got really close. So let me go to the first hour just to like specifically show you exactly what I'm talking about right here. So this is the initial balance on the day, which I think we did just break it. Okay, yeah, it literally just wicked below it. So we are now in a situation where we can say max 60 minutes extension. Max extension is 1.8%. The average extension, once you break to the downside, right here I'm highlighting it, is 0.2%. That's average. So you could take that number, you could take like a fib level of that number, or maybe scale out at half of it, the other half exactly at that number. But regardless, we know over the past 6 months, and I could even change the time frame. Let's look at it over the past 2 years. Over the past 6 months, when it breaks down on the bottom side, there's another 0.2%. Over the past 2 years, it's about 0.13%. But regardless, that's kind of a nice trade setup in reality. You might want to be a little bit more confident about taking it if you maybe wait for the Qs to also break, just because they're so highly correlated and it looks like you have some dip buying coming in at this key level. But I just wanted to show you the power of this, that, okay, like right away it updated. Did it double break as in break down and up? Nope, we didn't break the top. And the chance of that happening is, and it's actually really cool that they have all this standard. The chance of a double break, as in breaking the first hour from 9:30 to 10:30, the chance of breaking both the high and the low somewhere in the trading session is 31%. So there's about a 1 in 3 shot that we push all the way back up here. So is it impossible? No, it's just not necessarily like the highest odds play. But once again, that's all just this one report, and they have so many more. Look, it just is endless, and I cannot stress this enough. This is free to you. Use the link pinned to the top of chat in the description of the video, and you can get the stats, facts, and figures. Like, these are the real things you're going to need to know to actually be profitable in the market, rather than just firing from the hip. Get actual stats. Get actual figures. So you know, be like, okay, this percentage of the time it works. So that's going to adjust how much you're going for. What is your risk? And then all of a sudden, the real power here is when you start using some of the reports together. That's personally what I absolutely love. But just wanted to explain it because we're seeing a little bit of a breakdown right here. The 5 minute is now bearish, but the 10 and the 30 are bullish. The 5 minute, 10 minute, and 30 minute is holding bullish on the NASDAQ, which when I see the 10 and the 30 both being bullish, it doesn't necessarily make me want to chase it to the downside, just because price momentum is still strong. But just wanted to share that. So we did make a slightly new intraday low on the SPY, but it was quickly purchased because it happened right at 5,200. So this is, I don't know, a level that we already laid out before the market opened today of a level of interest. So if you're taking this is not a bad long trade. It really isn't, because you have such minimal risk. If you're long at 207, you could either risk 195 or 194. You have minimal risk and you have a lot of reward. I don't know if this individual one is going to work. I have absolutely no idea. It's a little bit of catching a falling knife, but if you do the proper bet sizing and you take this setup of a trade over and over again, well, you don't need to be right that often to pay off all your little like haircut losses. And I think that's a better way to look at it. I think there's too many people focusing on the success or failure of an individual trade when you need to be looking at it as like a whole. Actually, should I try to revert this? I'm a little nervous because if I'm wrong on this one, I'll actually be like legitimately in the red today. But then if I'm right on this one, I'll look like an absolute genius. But we're seeing a bit of a pop. I'm just wondering, are dip buyers actually going to be coming in here? Or is this just like a little bit of a dead cat bounce and we end up puking? The Qs did not break their intraday low. The SPY did. Both of these put in their intraday low at roughly 936. The SPY just barely punctured it, obviously puking from this 5,250 level, quick 50-point puke, all the way down to this next support level. We're kind of struggling right here. Let's look at the options flow. Puke down, a little bit of a bounce up, but really options flow in the S&P 500 looking pretty much exactly like price. While Mag 7, same thing. Someone took their profits at 1028. Right before the trade representative Greer started speaking. But right at 1028, we're seeing it like directly in the options market, both in the overall market and in the Mag 7, that someone was hitting their profit. That someone was locking in their profit. Bear in mind the 12 p.m. U.S.-China deadline looming. What What do you mean? Remember, the market moves on new news. That's not new. We already know it. We're the base assumption is that it's just happening. It's not like we all know something and then that thing actually happens and then the market reacts to the thing that we already know is going to happen. It would be more of a surprise if at noon something gets worse and there's an announcement, or if something gets better, because that's a new piece of information. But this whole, we literally, as of yesterday, we knew that. And I don't believe that there's been any update on top of that. So this idea of something going into effect that we're already all knowledgeable about, we're already all anticipating happening, I don't see why that would have an impact on the market. It's never 100% priced in, but it's like 99% priced. Dude, it's 11:06 and it's 50. Like, why would that have such a massive, I guess I just fully disagree. It's not a new, remember, the stock market is a future, it's a forward-looking mechanism. It's all about what is the next thing, not what do we already know about. Like, it's just not new. So it's almost like a company has really good earnings, like amazing earnings. We all know it, and then you buy it afterwards based on the good earnings. Like, well, congrats. Now that is literally already priced in. Well, like the whole world knows those good numbers, so what are you doing type of a situation. Yeah, SPY just chilling here, deciding if it really does or doesn't want to bounce out. I mean, I think it could be interesting on this recovery. We got to bounce. Let me alert that to myself, and then also alert this to myself. Potential recovery, but we're going to have to see the options. Like, do the options agree? I can tell you price momentum does. The 10-minute and the 30-minute are still green. The 10-minute and the 30-minute are still green. The fact that price momentum is still green does make me a little bit more bullish biased on the day trades. If the 5-minute starts to break down, well, NASDAQ, it hasn't. On the S&P 500, it has. If it keeps going down and drags the 10 with it, okay, that's going to be a warning shot. If the 30-minute goes, that's even more of a warning shot. But I'm also being mindful of the fact that we're kind of like just in this bullshit intraday chop. And we're kind of getting into this launch. Oh, hang on. We just got another update from, hang on. U.S. Trade Representative Greer, port fees on Chinese ships are not all going to be implemented. They're not at all going to be stacked. Axios reporter, Israel's Prime Minister Netanyahu, in a video distributed by his office, that a nuclear agreement with Iran would be acceptable to him only if it included the expulsion of all of Iran's nuclear facilities. U.S. Trade Representative Greer, any future trade agreements, we will have strong rules to avoid third countries like China from taking advantage of them. Italy's PM will head to the U.S. to negotiate tariff relief directly with Trump. That's, once again, Italy's PM, maybe a little bit of representing the EU. All right, so we're getting some news. Once again, remember this breakdown. The average extension over the past 6 months has been 0.2%. Over the past 2 years, it's been 0.6%. That's a very real play. A very real play. Let me get the exact number that would be. Personally, I would cut it in half. Well, we actually 0.13. We almost hit it. That's down there at 5186. 5186, which on SPX, if you're playing it in the options market, probably not making the most money off that play. But if you played it in futures, especially something super levered and volatile like NQ, that's a play, man. That's definitely a play. All right, someone just took massive profits at 1028. Not only can you see it in price where we just clearly started turning, but I think it's even more apparent right here in options. You can see this little spike in options volume, and then everything just turned. Right here, call started to be sold and put started to be purchased. Call delta dropping, put delta dropping. That's bearish, but obviously flipping. And then if you look at the S&P 500 right here, the put delta was pushing upward, most likely being closed out. Maybe had some people selling puts, just thinking we're actually going to bounce. And then that actually stopped at 1022, and then everything turned about 10 minutes later, 15 minutes later. where the calls got a little less enthusiastic. Someone at 10:30 took their call profit, and ever since then, we've been trending down. So the delta went from very, very evidently bullish up until about 10:23. Obviously, we are now downtrending. Same thing on the Mag 7. So obviously, if you're bearish, you're looking for this new trend to continue. And if you are bullish, you are looking for this trend to kind of reverse itself and more so mimic what we saw early this morning. But thus far, today's trading action has been the tale of two different stories. The first hour was legitimately bullish in the shortest time period, not only with price, with higher highs, higher lows, with price momentum, and with options flow. And then someone started hitting the cash register and throwing on new bearish positions at 10:28. And ever since then, the bears have been in control. So thus far, we've had, I don't know, from 9:30 to 11, two very evidently different chapters. The first hour was bullish. The second, like the half hour following that, clearly bearish. And what will the next half hour bring? Your guess is as good as mine. But guess what? It always comes back to stick to your trading system, stick to your trading methodology. And as if you're in the state of like working out what that is, and you're like, okay, like how often does this work? How often doesn't it work? If you're that person trying to figure it out, well, at least make sure you're taking minimal risk, high reward type of trades. Look at all those swing points. If you need a way to easily identify swing points, download, it's free. It's called Fractals, Fractals. And what it does is it just marks out the recent swing highs and lows for you. Swing high, swing low, swing high, swing low, swing high. And right now we're seeing lower highs and now fresh lows. Once again, it's called Fractals. On your platform, it might be called William Fractals. That is an easy tool to just quickly identify like where the swing high and the swing lows are. Once again, it's called Fractals. I use it all the time. It's just these green carrots and these red carrots just to see, like, instead of you going and be like, okay, like measuring it out, where's the high, where's the low? It's just really easy visually to say, okay, that's a high, that's a high, that's a low. We broke this low, potential new. But really, ever since we snapped that at 1042, we had lower highs and lower lows, and we're just seeing how deep this next low is going to be. So just wanted to call that out to everyone. Super easy tool. Once again, it's called Fractals. It's just a nice visual cheat sheet of, I don't know, whatever the hell's going on. Whatever the hell's going on, we so screwed. Oh, I don't think so at all. I think actually relative to what's been going on in the past 2 weeks, we're kind of relative to that time period, we're better off than we've been. Really relative to even the last week, I would say, we're better than we've been. Really, like it's just, we're already seeing progress being made. How many, like 70 plus countries have already reached out saying, yeah, we'll do a deal. We'll figure this out. So congrats to everyone who took this initial balance trade. That one like actually worked really, really well this morning. Like you're probably, we're actually beyond that target. And then if you took that in something like the NASDAQ, you made a shitload of money, especially if you took that nice breakdown right there at 1106. Damn, I wish I took that. I very much wish I took that. I wish, but alas, I didn't. So we took out that low, The initial balance play called out by Edgeville, working out pretty nicely. All right, well, a tale of two different stories today. The bulls were dominant. Now the bears are dominant. And the question is, what in the world is going to be happening this afternoon? We'll find out. Folks, any hoozles, that's what I have for you. Obviously, show a little bit of love to Edgeville. Check it out. Pinned to the top of chat. In the description, you get that free trial with that link. You got to use the link. And then if you want to trade with someone else's money right now, I would say the best financial offer is from Take Profit Trader. Use that code Dooney to not only get 30% off for life, but there's also no activation fee as of now if you use that code when you pass the eval to go up to the performance account. That's what I have for you. I'll be doing an update video tonight. It'll come out roughly around 7 p.m. So make sure you're checking that out wherever you like to watch the show. And then also tomorrow morning, we're going to be streaming once again at 9 a.m. bright and early. So I hope to see you there. That's what I have for you now. I'll catch you guys later. I appreciate all the good vibes. Much love. Peace.